Take stock of the global handover from last night. The United States, let's begin there. They were pretty happy. The markets recovered yesterday. The Dow was up 160 points or 0.6%. The S&P 500 was up 1.3% and the Nasdaq was up 1.4%. Now, if you're wondering why this was, it was broadly because the Fed came out with its MPC meeting yesterday and they've decided to leave interest rates unchanged. So interest rates will likely stay near zero for the foreseeable future. That kept markets fairly buoyant. Also, CEOs and top brass of the big tech companies went and met with US lawmakers regarding the big data security, which we've been hearing so much about. And it seems that those conversations were also fairly constructive. Now, moving down to Europe, Europe was in anticipation of what the Fed would say. So their markets were a bit flat and in fact closed the day just under the flat line, a mild bit in the red. And over here, all your major sectors and bourses were pointing in different directions. So no clear trend visible as the market was waiting to hear what the Fed would do. Now, if we come down to Asia, which has reacted this morning to the Fed announcement, the reaction's been quite positive. If you want to look at it, in Japan, the Nikkei rose 0.42% in early trade. The Topix was up 0.3%. Korean Kospi was up 0.67%. Australian S&P and ASX 200 was up 0.7%. And overall, the MSCI index ex-Japan traded around 0.25% higher. So Asian markets seem to be liking what they've heard from the US handover over the last night or so. Now, coming down to oil and gold. Oil prices were actually also going to recover. US crude inventories have fallen, and that's a good sign. So that does give you some wiggle room there for prices to inch upward. However, another piece of news which also came in yesterday, which was kind of acting as a counterweight to the crude oil prices, was the fact that cases have had a record day worldwide. So the global surge was the highest that we've seen in recent times, and that again has kept your prices under check. So likely because demand will be subdued while people grapple and deal with the virus and get it out of their system until the required levels of herd immunity are achieved. So on the back of this, Brent kind of was around $43.67 per barrel, and West Texas Intermediate was $41.27 per barrel. So assuming that coronavirus cases are a 2-3 week phenomena for most people and then they kind of dissipate and disappear, your crude inventory should continue to fall as demand gradually picks up. Finally, gold. It doesn't matter whether the Fed keeps rates unchanged or not. It doesn't really matter whether the economic outlook improves or not. Gold is going to continue to rally on two sides. One, because people are uncertain of what's happening in the stock market and whether they can trust these valuations given that there's such a big disconnect between the economies and the valuations. On the flip side, it's just a safe haven buying when you don't know what the future is going to be of asset prices. Gold seems to be the preferred choice. So on the back of this, again, we had record highs for gold. Spot gold was $1,979 per ounce and gold futures were $1,953.